All right, good morning, everybody. Not much on the agenda today. The dollar opens at 8, the bonds open at 8.20, and then we have the 8:30 retail sales and 10 o'clock existing home sales. And that rig count, we don't need to worry about that one. It's not going to impact the marketplace. So by 10 o'clock, we're done, which is really great because it leaves the opportunity for a 0 day this afternoon without worrying about economics. All right, so we don't have any events this afternoon that should conflict with us. The only other issue that is ongoing that we gotta keep our eye on is the peace talks. The market has demonstrated repeatedly that any kind of news coming out on those peace talks, good or bad, is going to shake this market to its core, um, even if it's not true. Right? The last Friday, Putin gave that statement about the talks were going good. And even before it was validated and proven to be false, the market spiked over 1%. We are outside the weekly expected move. Someone was asking yesterday if we were going to put on the butterfly trade for today. Nope. We had a half day wedge breakout, which is a really bullish play yesterday afternoon. It's one of my favorite afternoon plays. Wasn't looking to put it on at this point. Now we could still come back down and tag that. We could absolutely. But the butterfly already has a low win rate. No reason to think at this point we'd actually get to tag the top of the expected move. We've had many, many weeks in a row where we did close inside the box. And, it's like sooner or later, inevitably, you're going to have a week where you don't. If we're outside and we stuck it from Wednesday into Thursday, it's very unlikely that Friday we're going to just stay inside of Thursday's range. Inside day. That is our range for the day. Nice and simple and easy. One thing to notice, and I'm on the daily chart here on the right side for a reason, is the size of next week's weekly expected move. Now, it's not set in stone because the indicator will move through the day as price moves. And so by the end of the day, it could be bigger than it is now, but that's a reduced week compared to the week we just had. So it's indicating that volatility is compressing or shrinking or reducing next week versus this week. Well, I don't know about you guys, but I don't feel any less that the market is any less violent now than it was Monday. So we'll see. That weekly expected move is a nice little gauge to kind of get a feel for what the market makers have in mind on a week to week basis. We are trapped between the 20 and the 50 on the intraday. These 20-50 lines, orange and green, are off of the daily chart. So you can see very slightly there's a 50 period moving average at 44.23. It's on the daily chart. Well, that's over our head. So if we continue to make an advance to the upside today, which is likely that we can continue to go upward, but that would be my alternate thesis, not my first plan of attack. We would be coming into contact with that 50 today. So if we break above yesterday's high, you absolutely want to go back out to the daily chart and check and see where the heck is that 50. Because if we get above yesterday's high, then we're going to hit that 50. 44.23. Nice, simple number to keep track of. 44.11 is the cog line, which is very close to yesterday's high. So you could just keep track of the cog line, or you could keep track of yesterday's high. Either one, right? Either one. Doesn't matter. Should we break to the downside, there is the daily 20 period moving average underneath this below 4,300. Right. So if we get above 4,400, we've got the 50. If we get below 4,300, we have the 20. That's a relatively decent range. Considering the current ADR, we could make that distance, but you got to keep in mind 12 hours is already passed, right? So we're kind of burning daylight at this point. The clock's ticking, and it becomes more and more unlikely we're going to hit either one of those two today. We've got a relatively decent range marking back from Wednesday into the close to yesterday at its highest point. That gives us 4360 to just above the 4400, back near that cog line again. It's very likely we're going to hold this range. Today's triple witching, and I've been asked by multiple people this week how we expect triple witching to affect the market. Historically speaking, there's a bullish bias. By no means think that you should run out and buy anything. It's bullish because they're going in and they're rotating out of their basket of stocks. When interest rates are really, really cheap, they quit doing that trade so much. But when they start bringing the interest rates back, they're going to start running that more, including short trades. Well, how do you get out of short trades? You buy them back. So when it's triple witching, there's that additional buying going on because they're buying back those positions. So in the week coming into triple witching, historically, we've seen a rise in the market and a decrease in volatility. And then right on the other side of triple witching, we see just the opposite, a rise in volatility and a drop in the market. Now, seasonality is a very odd way to try to trade the market, right? We don't want to trade based on seasonality. Just want to have some perspective of what happens historically, right? That makes more sense. So there is a lot of information out on the web if you wanted to go looking into triple witching. I recommend Tasty Trades. They have always been my go-to for back testing, research, seasonality. They're phenomenal. They're free and they're on YouTube, right? So if you were to type in, triple witching, Tasty Trades, or Tasty Works, you'll find some videos. They may be a little over your head, but write down the things you don't understand, bring it into the Discord and ask questions. One thing to keep in mind is we still don't have any cement guidance on this war, right? They say one side saying one thing and one side saying the other. So we got conflicting signals. Well, if we don't get any good signals going into the close, it's hard to believe that anybody's going to try to build any big positions. So it'll be like the Friday we had 2 weeks back, where we were just expecting to go into the close, just a nice, boring sideways day, especially with the rally up that we've had. We very likely are just going to sit inside day, that we're just going to maintain right inside of yesterday's range, especially since it was such a big range. Speaking of yesterday, I've left the sidebar open because yesterday was a half day wedge breakout. And for anybody who's been through my coaching courses and have gone through the trend day material and have seen me talk about this before, you'll know it's one of our days. I like this one so much. When I was working on learning how to do video editing, I actually made a little 3-minute video on this thing, right? Where the video zooms in and zooms out and shows multiple times where we've had this half day wedge breakout. It's an absolutely amazing trade setup. We get like 1 or 2 of those a year or a month. You see how we had a bullish tick through most of the day yesterday? Yeah, I mean, we dipped it down a few times, but for the most part, especially in the afternoon when the half day wedge triggered, we really maintained that bullish posture. And we had cumulative tick comparison maintaining the same thing. You would have been able to validate it on the advancing issues in the S&P and the Nasdaq. Same half wedge breakout setup in the advancing issues versus the declining issues. And notice we didn't get into the extremes. We weren't running a Nasdaq above 90% into that danger zone. We were sticking right around that 75, 85 bullish, right there, right where we want to be, right in the sweet spot. Same thing with the S&P. We weren't sitting up into the 450s, 490s. We were right between that 375 and 425 area, the sweet spot. And we had it confirmed in the fangs, same thing. Now, the only thing that made it a little bit doubtful was how late it came. The breakout came after 1 o'clock. And usually, when we get the breakout after 1 o'clock, we don't get as much of a follow through, right? That follow through was still, because of the amount of volatility we have right now, it was still more than enough. Now, I've built my own strategies on this thing, and I used to wait for the breakout. That used to be the way I would do it. But it's a momentum breakout, and most of the time it breaks out with such conviction, you don't get a Busby. So if you're waiting on the breakout and you're waiting and you're waiting and it finally breaks out, and then you're thinking, okay, well, I'll catch it when it pulls back. It rarely pulls back. In fact, if it does pull back, you don't want it because it's a momentum breakout. And on momentum breakouts, you have to buy high, sell higher. I don't like buying high and selling higher. So my way of getting into this thing, after doing my own research, is to get in after 11 on the tag of the trend line of the angled support line. And that way you're already in it when it gets to the top and breaks out. This one worked really well, but a lot of times it'll get to the top and it'll pull back yet again, and then it'll get to the top and pull back yet again, right? It's wedging up more and more. So this one had one single perfect pullback, but that's kind of rare. It's not usually that good. But still, when you're getting in along the trend line, it runs up. If it fails to break out, you take your profit, you reset, get another entry off the lows. In the futures, that works great. In the options, you just hold on, right? There's no reason to keep getting in and out with the options, but the options have less point per point risk, right? It's a whole lot easier to hold an option and take some heat than it is to hold the futures and take some heat. Beautiful setup. So on the ES, there was a Friday close a while back that created a massive gap on Sunday night. This red box is highlighting that big gap. I've got the line marked 4380. That was the Friday close on February 25th. And we're fooling around in that area. Now, obviously, we've gone through it a few times. There's no, there's no stuck traders or liquidity or anything like that. We've wiped all that out. But there is volume there now, right? Volume nodes. So we've got a lot of resistance at around that 4390, 4400 area. And we're really struggling to get through that. And there's a shallow area underneath that, which goes all the way down to around 4360 before we find a little bit of support. If we break through the Globex low, we're very likely going to be retesting the point of control of yesterday, which would put us at 4350. We are also well outside the box. kind of bring that box in where it's easier to see, we are extremely far outside the box. So I want to keep an eye on, are we moving back towards the box, or are we continuing to hold and move away from the box? We could hold and stay away from the box. Just statistically speaking, when we're this far outside the box, we generally come back to the box. That untouched point of control from yesterday, if you're looking at each day having its own volume profile, you mark yesterday's point of control and you carry it forward into today's chart. Well, you can see it's underneath us, 43.55. So if we break below today's Globex low, that's the target, the point of control from yesterday. We have another old one that is still untouched from Tuesday, but the Globex held that day, and so it remains untouched. We just carry it forward, leave it there. It's no big deal. It's not like it's, it's not destined to come down and hit that and get that covered. It's just an untouched point of control. Same thing on the NASDAQ, although we almost got there. Right around 13.95. So we got an untouched point of control. Should we break below the Globex low, that'll be our target. Notice how much more the NASDAQ is inside of yesterday's price action, as opposed to the NASDAQ, which was and is still sitting on the upper side of yesterday's price action. The NASDAQ is way more in the middle of all of that. And looking at the volume profile here, we're back at the value area high. So we're not way overextended of this volume profile compared to where the ES is at. We are well above the 20, not much of an issue there. And look at the size of next week's expected move and how much they've reduced volatility, or how much their expectations of volatility have shrunk from this week to next week. The 50 is way too far overhead to be concerned about, so we're not going to be too worried about hitting the 50 today. If we break back through the upside and get through our own Globex high, then the focus is going to be yesterday's high, 14,125. It's the quarter above the roundy, the 100 roundy. That's a long ways away. It's very unlikely we would make such a distance unless we have a significant push. The only thing that I think that could get us there outside of anything from the econ, and this kind of econ, I don't expect it to get there. Maybe the leading indicator could do it. Maybe. Doubtful. So the only thing that could really kind of give us that rally or that boost would be really good news on the negotiations of a ceasefire. Outside of that kind of news, it's really hard to believe that we could get such a bullish push and get us back up to those levels of yesterday. We would also need to see the AD, or the advancing issues, maintain that 75-80 area that we were just talking about when we were talking about the half-day wedge. We would have to have the two risk-on sectors really lit up. There would be no wishy-washy nature to get back up to that level. So we're very likely going to maintain our own Globex high for the high of the day, and Wednesday's high of day. And we could get down to yesterday's low. It's possible. That's a considerable distance also, and I just don't expect it to be that bearish unless the econ this morning really starts to give us a negative bias. The market seems relatively content with our current situation. We had a buy setup on a lot of the FANG names. It's worth taking a look at. All right, you can see the significant push in Tesla. I know it's not technically one of the FANG names, but when we talk about FANG Man plus T, this is the T that we're referring to. There it is, finally. Urgh. Trendline breakover. Inside day breakout. It's two different signals. We were inside of yesterday's range, had a significant break above yesterday's high, and broke that trend line and broke the high of this range that we've been stuck in. Now, the more times you can add that word and, the better, right? You're looking for multiple signals validating a bias. On the other hand, we went from 754 or 756 all the way up to 866 plus some. It's been a significant rally to the upside in the last few days. Guys, a market just doesn't go in one direction without taking a breather along the way, especially going into the close on a Friday where nobody wants to hold on to a lot of stuff. And you got triple witching on top of all of that. Triple witching often puts a lot of firms into cash because they've closed something down. They don't necessarily have to go open something up on the same day. One thing to keep in mind with triple witching is it provides a lot of volume. Don't let that volume confuse you and make you believe that there's some kind of UOA, some unusual options activity out there. Anything that we would look at for flow or elevated volume or anything like that is going to be very difficult to read today. It's going to be very misleading because it can make you believe that there's activity going on that we would generally see as bullish or bearish. And it's really just these institutions reshaping their positions. NVIDIA, trendline breakover earlier in the week, massive gap up, and then inside day breakout yesterday. Now, this is looking really weak and really stretched out. And we did manage to break that range that it had been in. We're going to find that range on most of these products. I wouldn't look for a continuation today. We're going to be wanting to look at all of these for the next leg up. And you can see there's plenty of room. In NVIDIA, it's a good 20-point move. Every one of the FANG names that have this setup have a lot of room to the upside. We don't need to get it today because of everything that we've already stated, it's a really good idea not to do it today. Same thing in Netflix, trend line breakover. Large expansion candles broke through the top of the range. Inside day breakout. So we could look for a little bit of follow through today in these names, but it's more likely that we've set the high of the day. All of these provide an opportunity for a 0 day. The MOC yesterday was 174 on the buy side, 150 on the sell side. We're looking at Microsoft. It broke out of the range the other day. Yesterday did maintain that bullish bias. We did finally break outside of yesterday's range as a part of that half day breakout, but you can really see how this thing is pretty exhausted. We're going to expect to see this consolidation again, just like the others. And for next week, we've got that 50 period overhead, the 200 overhead, and that is a 5200 cross that you're seeing right there. $300 is the roundy, and it's the next area. I still don't think we're going to make that move or even continue to make that move this week. Right? So we're just priming up for next week. Same thing in Google. Trend line breakover. Managed to get through the top of the range just freaking barely. Barely counts. Hand grenades and horseshoes. This is 100% a buy signal on every single one of these FANG names. Every one of them. This is a legitimate buy signal. The problem with this buy signal, though, is that no matter how much technical analysis you put into all of this, the news coming out of the Ukraine Russia situation is the only thing that's going to dominate the market. Right? So even if it is the perfect buy signal, one of the most popular buy signals in technical analysis, you still want to approach it with a lot of caution. Same thing with Amazon. Plenty of room to the upside, by the way. And it looks a lot more healthy on that breakout than Microsoft did, right? Next level of resistance in Amazon, 3,200. Still wouldn't look for the expansion today. And in fact, this would be my target for a 0 day if I see any weakness in this thing near the open. Just because of how far this thing traveled this week. When you look at this one compared to a lot of the other FANG names, this one's expanded percentage-wise a lot farther. I don't like to think about the phrases overbought, oversold, overextended. It makes you, it implies that it's gone too far or that it's in some way exceeded its means and that we're going to get some kind of linear regression at this point, which is it's very likely. But those phrases can kind of add additional bias that we really don't need right now. But if you consider this stretch in price, this movement that we've seen in all the different FANG names that we've been jumping through, Google's and Amazon is definitely one that's more stretched than the others. Take Apple for an example. It's the same setup. It got back above that 200, which is that purple line on the daily, made it back above that this week. Trend line breakover, which is, again, perfect buy signal. But look at the follow through from yesterday after we had the breakout on Thursday, or the breakout on Wednesday and the follow through yesterday on Thursday. Not much follow through. Not looking really healthy. All right, now Thinkorswim doesn't do a really good job when it comes to pre-market stuff, but there are some aftermarket tools that we can use to kind of help out a little bit, right? Little custom indicators. Let's see, surely I have one more on there. Nope. All right. So bring in the sectors. Now, these watch lists and indicators are all in the OEC or the TOS workbook. That's where all these indicators are. We need a custom pre-market indicator. So as you can see, it is possible to be able to scan or use a watch list and identify what's up in the pre-market, but you're very likely going to have to use something custom like this. SQQQ. Just kind of check some of these, see if it fits. So we can see, yep, that's up this morning. It shows 2.7. It's not always going to be really accurate. You can see it with the drawing tool. I'm measuring something around 2.71. Yeah, it's pretty close. So we've got marijuana, energy, everything else is either flat or negative. We need to get these names turned around, most specifically finance and technology. When we start to see that weakness carrying over in finance and technology, then not only are we not going to hold the line, we're going to start to fade off of the line. We're going to start to fade down through the morning. Now, if you're not really interested in using modified tools, or maybe you're not comfortable using modified tools, Thinkorswim still has other options available to you. This is one I rarely see people use, but it's a really useful one. It's boom, 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 boom. Let's see where use the news. So use the news is a completely different thing than anything else that Thinkorswim has. It doesn't look like any of its other tools at all. Almost like a completely different group of people or a different coder wrote this as opposed to all the other tools that it has. So in use the news, one of the things that it has is pre-market movers. If I click on that, it will bring up a watch list of names that are moving in the pre-market. So let's check these a little bit and just see if it's at all doing anything remotely useful for us. So there's no liquidity in a lot of these names. So you would need some way to sort these. We're not seeing any volume, so I don't see why it's calling it a pre-market mover. There's a pre-market mover, right? But it's one more tool that you wouldn't have to code, you wouldn't have to program. You just hit the little button. I wanted to call it a flag, but it's not really a flag. Hit the ticket icon there and go in and turn on or turn off what it is that you want to focus on. But it's not coding, right? You're not sitting there messing with a bunch of language and coding. You're just checking and unchecking the things that you're focused on. Analyst rate changes, analyst upgrades, analyst downgrades. So it's Really useful tool. Really going to help you out. Doesn't require any form of it, coding skills whatsoever. It's called Use the News. Another one that they have are pre-built watch lists. So in the lovers and losers, you got pre-market movers again. Now in this watch list, it's still not going to show you any change percent unless you're running a custom watch list on, a custom column. But all these names are a part of the pre-market movers. I would only be interested in the biggest market cap weight names. So that's how I would sort them. And that way I'm not sitting there trying to filter through all the names on this list, right? Because a lot of these I don't recognize. They're likely junk that I wouldn't want to trade anyways. Kind of sums it up with, say, the top 10 names on that list, done and done. No coding required. There's also a gap up and gap down. It's in public. All of these are alphabetized. So you're looking for G, gap up, gap down. Another watch list. No coding required. Again, I would just sort them by market cap because that's what suits me. You could sort them, say, by price, right? If you know you're a day trader and you're not going to trade shares of stock that are, beyond your means, maybe sorting them by price would be a good way to go. It's not perfect, but if you don't have the money to go, say, get something like TrendSpider or TradingView or Trade Ideas, something that has pre-market change percent, something that's got some good solid scanning behind it, and if you don't know how to code on Thinkorswim to make your own stuff, then these are going to be better than nothing. For me personally, I only want to trade things that have the options, right? So a really good way to go is just to go in and set your scanner to weeklies, and then there's your pre-market movers, your gappers, whatever it is that you want to do, and make your own using the scanner rather than just using this generic watch list with all these names on it, right? That way the only names that you see already fit the other criteria that you've used when you put together the scan list. That'll work just as good. Then you get to trading for a while, you start to be profitable, then you could go and, get something like TrendSpider or TradingView. If you're wanting to keep your costs down though until you're at least beginning to be profitable, then that's a good way to kind of get things done. It's not looking really good out there on anything. We're not overly bullish. We're not bearish. We're just kind of sticking the line, right? And that makes sense because it's been a really busy week. Been a lot of information coming out. We got the triple witching. We're just not expecting to see people really start to build into the close. Expect this to be a kind of boring sideways Friday like we had a couple Fridays ago. What we're looking at right here is TrendSpider. Now, TrendSpider's got some really amazing scanning capabilities. They've recently updated their site and they now provide unusual options activity, analyst upgrades and downgrades, news on particular products. When you activate the sidebar, they've got some pretty cool widgets nowadays that they've really put into this thing. But even aside from all of that, their scanning capabilities on TrendSpider is pretty freaking awesome. They've got a lot of videos too on YouTube that explain what capabilities they have and how to make those adjustments. So, it certainly a good way to go. That one or Trading View. We kind of swap off on different days between those two, Trading View and TrendSpider. They're just a really good way to take a look at the morning, see what's going on out there, sectors, names in the sector, and different industries, peer groups, and then follow it down the rabbit hole, right? All right, everybody. Normally on Fridays, there is nobody scheduled to stream, and I would go in and stream anyways. That's not going to be the case today. I got somewhere to be. So if you're wondering why you're not seeing anybody streaming this morning, it's because there's nobody scheduled to stream, and there normally isn't anybody scheduled to stream. I just go in and do it anyways, right? So if you go to the Zoom channel, you'll see the schedule. Friday morning, chat only. Pennies, go to the Zoom schedule. Friday morning, chat only. Futures, chat only. Everybody, be careful, be safe. And I'll see you all next week. We'll do it again.